Hey guys, welcome back to the Smash Property Podcast. Today's episode, we're talking about 5 things that actually matter when you are buying an investment property and what you should be focused on. We're also going to go through some things that you should not be worried about at all so you don't waste your time and get caught up on the wrong things and potentially miss out on a deal to build your property portfolio. We're going to talk through that and more in today's episode. Before we get there though, I'm joined back again, once again, by Akira. How you doing?
Good. I feel like I'm very excited to do this podcast. The last couple of days have been going very quickly on my side. Lots of socializing events, I think, this time of year. Is that normal?
I feel like it kind of is. For March, April, May is a lot of weddings and birthdays and all that sort of things. But I tell you, one thing I heard the other day, I forgot to tell you about this, that I actually heard that you are the number one female buyer's agent in the country. How do you feel about
that? I love that.
It's very.
I got caught off guard.
It's a very male-dominated space, and there's no females out there killing it like you are. So I think you should be proud of that.
I love this space, and I feel like it's actually it's my superpower, secretly, to be fair, being a female in this industry, because I think the connection that you're able to build with
the deals that you get done,
the agents,
pretty good.
They're good.
Yeah.
They're good. Yeah. So I think that softness really does go a long way to get things over the line, and the empathy that, the
like
natural
all these
nature.
Douchebag male buyers agents thinking
do it now. No, I think it's very cool being a female in the industry and getting to work with like-minded property managers and agents. It's very cool.
Yeah, awesome.
But yeah, no, that caught me off guard. But thank you.
All right, so let's get into this episode, and I really want to make sure that we deliver some value for listeners, because the reason this has come about is there's a lot of friggin' noise out there as it relates to property investing, right? A lot of things you should do, a lot of things you shouldn't do, a lot of BS from people that haven't done it, and it's just confusing, because it was confusing for me coming up 10 years ago, trying to find stuff online and sifting through everything and work out what I should be focused on. It seems overwhelming. What the hell do I do? So this is just like practical things that you absolutely should focus on when you're buying an investment property. And we're going to talk through some things based on our experiences on like what you shouldn't be worried about, because there's a ton of stuff where people just get caught up and it's like, hang on, what are you worried about this for? It doesn't make any sense.
Exactly. And the value from that is we, of course, work with a whole range of different age groups, different personality types being a buyer's agent. You get to understand, all the emotional barriers that people have to go through to be able to get to the point where they actually pull the trigger on a property. So this comes from the realm of understanding all the different types of people out there, making sure that if this is something that you're experiencing as a listener, that you're not alone in it and other people are going through it. And it's just something that in your psyche you have to work through and navigate, essentially. So I think let's start from the positive side of what you do have to focus on. From your experience, what would you say that is? Number one, main thing.
The number one main thing I think investors should be focused on, regardless if you're doing it yourself, if you're using a BA, if you've just done a property course, like whatever, focus on market selection. The reason being, market selection is going to do majority of the heavy lifting when it comes to you building wealth, number one, and majority of the heavy lifting when it comes to you increasing your cash flow and your rental income as well. So, because the reason being, you can have all the strategy in the world. You can negotiate the greatest price. You can do all these sorts of things. But if you bought in a market that's not growing in value or doesn't have the potential to, what's the point? It doesn't make any sense. So I think the number one thing is making sure you're buying in the right market. You can talk about timing and all sorts of things. Like, yes, if you can time it, great, cool. But I'm not about predicting the future. No one can, despite what they want to say in terms of the data and all this kind of crap. It's just buying in a good market that has a solid track record for growth and has some good indicators for growth moving forward. So the number one thing is just make sure you get that market selection right from the jump. It's the main thing to focus on.
Yeah, take things for what they are. See it as it is.
Exactly.
I agree with that.
Exactly.
I think also, it's tricky, and a couple of the team members have said this with purchasing property. You know, you often would have found during the COVID period that anything you bought would have gone up in value. So I think it's going to be interesting over the next couple of years for people who may have done a DIY and done it themselves, which more power to you for doing that. But navigating now with the change of market and the change of, you know, where the whole country is, what types of areas and markets are actually going to grow in value. That's going to be the difference between, you know, pre-COVID and where we're at now.
Yeah, exactly right. And, you know, we've seen it time and time again. We've actually, I think I've shared a couple of stories before of investors that openly would admit, hey, I got overly confident during the COVID era. I thought, you know, anything I touched turned to gold. And like the reality is anyone bought anything, you would have done well.
Yeah.
But like I've said before, you know, I think the period moving forward is going to separate the real BAs from the fake BAs, the real investors from the fake investors, because it's not just buy anything and it grows in value. You've got to buy in the right market. That's why now more than ever, market selection is everything.
Definitely. And I find this one interesting because, you know, a lot of people do have preference on the location just based on, oh, my mom said this, or, you know, that's, you know, what I kind of feel might be the right area. Oh, it's close. Maybe it'll be a good option for me.
Yep.
But it's not based on any value or any true indication of best value for money, essentially. So it's an interesting one to make sure that your decision is to be guided by your financial position, you know, what your budget is and what you're looking to do as the overall objective and outcome.
Correct. So I'm just going to drop a bit of value here as to, all right, yeah, cool, market selection. How do I know that it's a good market, right? So I think first and foremost, we want to look at the historical growth rate. Now, I know historical growth rate does not mean that's going to be the sustained growth rate for the period of time. But if you can look at least 10 plus years worth of data, that's a pretty good indicator as to what might happen tomorrow. Because outside of that, there is really no other indicator you have of how that market is going to perform. So look at historical growth rate. I like to look at things like days on market. Days on market is good to give you a indication to go, how quickly is stock moving through that particular market, right? Anything under 30 days, pretty hot market. 30 to 60, it's kind of normal. 60 and over, a little bit slow. So just pay attention to that. Number 3, I like to look at vacancy rates, right? If I buy a property, how quickly can I actually get it tenanted and get it rented out and start collecting rental income? Anything below 1% is pretty good. Anything over 1%, you might want to start asking some questions around the area and all that sort of thing. I also like to, there's a whole bunch of data things we can look at here, but I'm just giving some high level things that people can look at. So we've talked about historical growth rate, days on market, vacancy rates. Those are probably like the 3 key things that you can look at. And then, of course, you can drill down into the demographics and you can look at all these other sorts of things out there. But sticking with those high-level fundamentals, and if they sort of check out, then that's when you can open the door to start doing all the other due diligence. So you just don't waste your time with stuff that doesn't make any sense.
Definitely. And I think very simply put, data is all well and good. Sometimes it is lagged.
Correct.
So my perspective on it, jump on the damn phone. Like, I'm very old school with this. Like, we're investing at the moment in some areas just based on preference for clients because they want to live there at some point. And now when you speak to the agents, you do get a gauge of, you know, maybe the market is cooling. And why is that? So being really I guess, personable and having good communication skills is important. I can't even say communication skills is important because then that's going to enable you to actually see what's happening in real time. So
that right there, folks, I think is probably one of the most valuable, more so than any data. You hit the nail on the head. It's data tells part of the story, but humans tell the majority of the story, right? And jumping on the phones to talk to agents, talk to property managers in the area. Because like you said, data sort of comes out 1, 2, 3 months later. And then sometimes, you know, the thing has already happened. So I think that's a great point. Jump on the phones. And this is where, you know, BAs like yourself really do shine because it's not just, look, the data says this. You're jumping on, you're doing a lot of the legwork.
I think that's a big thing. And then, you just build relationships that way. And then you understand, all right, can I take this for truth, or is that something that I need to dig deep on and do some detective work on? Number 2, what would you say is the second thing that is very important to focus on as you start your journey?
So market selection, number 1. Number 2, I'm going to say is negotiation and then buying I'm going to say the negotiation and buying the property at the best price possible. I don't like to say below market value.
Yeah.
I think it's horseshit because market value is what you fucking pay for the property. It's not like, it's just become this term in the industry. It gets thrown around a lot.
It's a marketing thing, to be fair.
Below comparable sale value, I often quite say, but essentially the best price possible, right? The lowest price possible. And you do that through negotiating the best terms for yourself. So this is where your emotional intelligence comes into play. This is where having an understanding of a true understanding of the market, having spoken to people, not just going off what the computer screen is telling you, to really just get a lay of the land to understand where the seller's at. All right. Why are they selling the property? Are they selling in a buyer's market or is it a seller's market? All right. What's the reason for the sale? What conditions might actually sweeten the deal a little bit? Because yes, it's mostly about price. Let's be real. But sometimes there's some terms where, we've had lower price, but better terms, and we've won out the deal because sometimes they don't want the headache of, an occupier having to wait to sell their property to buy this one or whatever other conditions there might be. So just having that emotional know-how to go, okay, how can I get through to the sales agent to give me this information so that then when I put back my offer, it's as sweet as can be and I can get the deal done.
Definitely. So
that I can get the best price. Number one. Number two, understanding what other properties of comparable nature are selling for in the area recently. Not 3 months ago, not 6 months ago, like in the last couple of weeks, last month max, because the markets move so quickly. What was selling for, 600,000 3 months ago is not selling for 600,000 today. So just knowing that, and this is where you're going to have to do a bit of the legwork to understand what's actually selling in the area. What does it look like? Is my offer embarrassing? is it competitive? And that's where you're going to have to put in a bit of legwork to understand that.
Definitely. I actually might share some recent kind of deals that have come up to give context to this. For an example, when you're saying comparable sales, I'll just look at the Brizzy market in Ipswich Pocket, right? You will find deals on CoreLogic and comparable sales under 650. Now, big thing is to keep in mind the context of deals when you are comparing, because I often think as property, like people, there's no two properties that are exactly the same. There are always going to be variations in a deal. Now, sometimes the variation is that maybe there's a long-term lease in there and rent is slightly lower. And so for that reason, the new buyer will have to carry that cost. And so the price is then lower. Maybe there's something like the condition of the property. It was tenanted and then it's not at, prime pickup for a owner occupier that then puts that property in a disadvantage or advantage for the buyer where they can pick it up for slightly cheaper. So making sure that, when you're looking at comparable sales, when you're looking at your preferred deal or an offer that you're placing, that you're taking those things into context as well. Because often, like using Ipswich as an example, you'll have pockets that are growing at 9% on a long-term growth average. That's almost 10K a month on average. So looking at a deal maybe that had settled in February, we're now in May, is unrealistic because they would have negotiated that probably in December. And then that only sold and came online on February. So it's been very, I think, true to what is actually going on and just not taking it at face value and understanding the layers in it. Yeah,
no, exactly. And looking at these online estimates, I think is worth mentioning. Like we just mentioned, a lot of this data is lagged from several months ago. So even though it might give you a high confidence estimate, it is just that. It is an estimate. It doesn't mean that's the value of the property and anymore you're overpaying for it. Use it as a guide, absolutely. But this is where, like you said, looking at comparable sales recently, speaking to property managers and agents in the area is really valuable.
So I guess to summarize that is negotiating in a realistic way to get yourself the best outcome.
Exactly.
Because you lose deals trying to
you're going to lose
cheap.
deals. If you're going to try to be too cheap, you're going to lose deals. It is just going to cost you money if you're buying in the right market because you want to be doing that anyway. So it's going to cost you. And I think a lot of people kind of have. I was chatting with one of the boys yesterday, on Monday actually. A lot of people just have buyer's remorse. Just when you buy anything, it's like, I don't know if you've ever whenever I've bought a car, I've been like, oh fuck, like I probably paid like maybe 5-10 grand over for that. It's just, I think, a normal thing that you have. So obviously when you're buying a property, it's one of the most expensive things that we're ever going to buy ever. And there's obviously a debt attached to it. So there's just that psyche around, oh shit, like I've overpaid for this thing. Oh, what have I done? I think it's just like a normal thing that we go through. So I think just knowing that buyer's remorse is going to happen. But as long as you've done all these checks that we're talking about, you can put yourself, because
that's my job as well with coaching people through that.
Every property that I bought personally for myself, I have the same thing. I'm like, fuck, I overpaid. Remember the one in Richmond I bought, and I thought I'd overpaid for it, but 6 months later, the property's skyrocketed in value, and it's like, okay, hang on, let me just shut my mouth.
You did that with every single property, to be fair.
Exactly. So, like, if I'm doing it and I'm the freaking BA here, I can only imagine people out there that don't do this all the time feeling the same way.
That's right. I think, as you get more weathered with it, though, you do come to an understanding that if you are doing your due diligence and checks, you're kind of putting yourself. Because I always think waiting is going to put you out a couple more grand to find something that is of comparable value and investment grade as well.
Waiting's a loser's game, sorry to say.
Yeah, like it comes down to me like this. When I go to the shops and look for clothes, if I'm not buying something online, there is, at my age, I find that it's really hard to find clothes. So when I see something that I really like, I just get it. I don't wait, because then, you're just messing about and then it's not there. Then they don't have your size and da-da-da-da. So when you see something you like, you have that gut feeling that it is a good decision. You've checked your numbers. I can go for gold.
Yep, absolutely.
Doree, what do you reckon?
Number 3, it's got to be cash flow. Understanding your numbers. We talk about this all of the time, but 99% of people that we work with sometimes don't even ask to check this sort of stuff. It's really us telling them, hey, like, pay attention to this, but I think, especially if you're doing it yourself, it's not just about your mortgage, right? There are other expenses that go along with any property that you buy, and you've got to know what they are. So someone's going to manage the property for you, right? They're going to take a certain percentage of the rent, know what that is. What does the council rates look like? What do the water rates look like if you've got to pay, water access and things like that? What does the insurance and or strata look like for the property? These sorts of things are critical. Before you even put an offer down, you should know what these things are. I did a quick video on this earlier today, which will probably be out by the time this poddy's out, but that is a very quick way to do a quick feasibility study on the deal that you're looking at before you waste time doing research, before you waste time speaking to agents or putting offers down. You just quickly run these numbers, get yourself a little spreadsheet. We've got one if you need one. But they're so important, right? Because knowing what that is before you buy something is so critical. But I think that's not where it ends. It's like, okay, well, where does this go? I like to know, okay, I'll buy this today. It's going to be this cash flow, this growth, etc. But what does that look like over 5, 10, 15 years? What does the growth look like? That's why I'm buying the damn thing. I want to know where it's going to go. And you've obviously got to use historical growth rates to estimate that. I usually go, say for example, it's a 9% long-term growth rate. I go, okay, let me make it 5%. Let me just cut a few points off there and see what that looks like. That's probably a realistic way to look at it. With the cash flow as well, we always say what's negative cash flow today is not negative cash flow in 3, 4, 5 years from now. But you want to know what that looks like, because there's tax implications for that. Once you start going positive cash flow, you're going to have to pay tax on that. So just knowing what that really looks like over an extended period of time. And yes, these are estimates, but it's so important to know, at least have an estimate than fucking nothing. So that's critical. Cash flow is number 3.
Yeah, I love that. And I think, to be fair, just looking at our own portfolio and the forecasts we did, like, we always have like a yearly tracker, and that's like a forecast of the year following. Every single year has exceeded expectation.
Yeah,
obviously.
We've been very conservative with all of the estimates that we've done for ourselves and clients.
Yeah,
and
it's always working on worst case scenario, I think, as well, when you're putting these numbers in, because it's easy to say, all right, let's look at best case scenario, but
because you want to make it look good, but factor in inflation. Your costs are going to inflate over time.
I love that.
Factor in interest rates staying at 6-7% and having a little buffer in there. Don't use the full historical growth rate. Take a few points off it, so you chop that down a little bit. all these realistic things that you kind of go, all right, cool, yeah, that's more than realistic. In fact, it's conservative, because then most of the time it's on the other side, and you're like, yeah, fuck yeah, this is going mad. So
totally. It's funny. I am working with a client at the moment, and it's interesting because we'll talk about some of the things that you shouldn't focus on. But I think when you're looking at the cosmetics of the house, the layout, the things that are actually not very important, but then you come back to the numbers and look at the growth, you know, your mindset shifts, because then you see, all right, what kind of position will I be here in 5 years from now? Do I really care about the bathroom tapware?
Yeah, exactly.
It's a funny one.
Yeah.
So I think it's one of those things with just keeping focused on the numbers, like you're saying. And then is this number 4 or 3?
Up to number 4.
Number 4. Okay, so what's number 4?
I'm going to say it's to do with structuring and finance.
Okay.
So this is something you should be focused on, because there might be, and this is not financial advice in any way, I'm not an accountant or a broker or anything, but there are times when you know, it might be beneficial for you to buy in your personal name. But there also might be times where it's beneficial for you to buy inside of a trust or a company. Now, again, not financial advice in any way, shape or form. Speak to your accountant. And this is why I'm saying this is important to focus on, because there's tax implications for buying in your personal name. There's tax implications for doing it in a company and in a trust. There's pros and cons to both. And at different stages of your journey, you might need to pivot between the 2 or the 3 different structure types, right? Like we have, you know, buying the personal name, then pivoted into discretionary trust, then set up, you know, self-managed super fund. These are all things that you sort of need to be thinking about ahead of time, so that as and when you get there, you can kind of, all right, cool. It's sort of like that. You're playing chess, right? And you're a couple of moves ahead of the chessboard, and you kind of know, okay, when that happens, I'm going to do this. When my servicing gets capped out, I'm going to go, you know, put a discretionary trust, buy a positive cash flow property, whether it's commercial or a, you know, dual income property, have it, you know, sit inside that thing, increase my borrowing capacity, that sort of stuff, right? So, structuring and finance, critical component. And this is where having the right team is going to be critical for that specific purpose, right? Because not every broker is going to be an expert on SMSF lending or an expert on lending through structures and things like that. Not every accountant is going to be an expert in guiding you from a property investing perspective when it comes to putting properties inside of a trust. So you really got to have, you might have to go through a couple of accountants and brokers to really find one that really works. Little plug, if you need those hookups, we have them, and they're amazing brokers and accountants that we work with. But yeah, that's my take on number 4.
Definitely. I think, the structuring is critical, and having strategy at the start, before you even, you know, get your toes wet with the first in property, know what your actual overall objective is and why you're doing it. I say this all the time. I sound like a broken record, but it is important so that you can have a bit of foresight. Like you said, it's a chess game. Know where you're going, and then that way you're not being like having knee-jerk reactions.
Exactly. You're not reacting to things as they come up. You're proactively going, knew that was going to happen. Let me go and do this.
It's hard to do because, I get it. Nobody knows what's going to happen, you know, in the economy with interest rates, things like that. But it is important so that you're keeping yourself safe.
Correct.
Financially.
Correcto mundo.
Numero 5. What do you reckon that is?
Long-term value add potential.
Yeah.
I think, and this is probably more so our strategy based on our experience, what we see. But if you're, and again, this is what you need to focus on when you're buying a property. If you are looking at it, and we've said this in so many videos, if you're looking at it from what it looks like, I'm sorry, but you're missing the point. It's not what it looks like. It's what can you do to it. And the reason we want to focus on what the long-term value add potential is because not all markets increase in value all the time. A lot of markets, whilst they might have a long-term growth rate of 8-9%, they might be flat for a couple of years, and then they might have a 20% growth run in a year, right? So your growth is dependent on the market doing its thing. Why we want to take control of it and find a property where we can add value is because we can actually manufacture growth. We're not waiting for the market to increase in value. We are increasing the property's value by proactively doing renovations. And it's not ripping out the whole property, bare bones. It's cosmetic renovations, flooring, carpets, paintwork, maybe the light fixtures and fittings. These very minor things that you can do on the cheap add a significant amount of value to the property, so that then we can extract the equity out and we can go and redeploy that equity into another venture and do it all over again, rather than sitting there waiting, has the property grown in value now, checking online what's happening? No, you want to take control of that stuff. And reason why I guess you and I are so passionate about this is because we see people, and I'll let you maybe talk about this a little bit more, but we see people get caught up on such silly things that don't matter. Oh, I don't want to buy an old property because it's old. I like the new one. Hey, look at this property here. It was recently renovated. And I'm like, yeah, sure, it looks great. But someone else who's been smart is making the money out of that, not you. You're paying a premium for it, right? Be the smart investor who's making money out of it, not the one who's buying it at the premium price.
That's right.
So important.
Yeah, I agree with that one. But look, it is a bloody hard decision. I have to say that because, sometimes in a team when you're investing with your partner, you might have a different view on this. And I think essentially from my perspective, I do see this with a lot of couples where, one person might want something that looks super sexy, set and forget, looks modern, clean, pretty. And I get that. It's a home. I really do understand that. And it does have a great tenant appeal. But on the other side, like you were saying, this is an investment decision. You're not living there. You want the property to be comfortable, but you want to be able to add value to it. And now I do think, when you look at a property at face value, say it's from the 70s, you see some properties with this weird purple kind of flooring, and then you've got like these pea green kind of walls. It doesn't look nice. But all it takes is literally a paint job and some
I see
carpet.
dollar signs when I see that sort of stuff. Other people go, oh, no, that's... I don't
and it's all cosmetic stuff.
Yeah.
But to be fair, I think it's, being in the construction industry prior to this, like being there for like over 10 years, it's so easy to get scared of, a little bit of work that might be required on a property. But you don't all it takes is a couple of quotes to really understand what value you're getting for it.
Totally.
And a carpet in a 3-bedroom property is more than likely going to be less than 5K most cases. Especially when you look at the numbers, that then validates, all right, maybe I'm acquiring this property for maybe 15, 20K less than the comparable sales on market, but it only takes 10K to get the work done. So I'm up 10K.
And then let alone the value that you're going to add to it by doing those sorts of things.
Yeah. So it's all about looking at the numbers, I think, with adding value to a property and being able to understand where you can negotiate. I think that will set you aside and put you in a position where you're giving yourselves opportunity, most importantly.
Because at the end of the day, we are investing, right? Like this should just be about numbers. It shouldn't be about emotional overthinking and all these other sorts of things. It's like, all right, well, if the numbers are telling me this, hey, that's a good deal. Not what my heart's telling me, hey, I like that new one. Because everyone likes the newer property,
I love
right?
shiny
I want to live in a
things.
nice new property. I get it, right? But we're investing in it. We're not living in it.
Yeah.
Obviously, we don't want to, buy a rundown shack that no one wants to live in.
Yeah,
but
I'm not saying that, by the way.
No, I know, but I think it's just going, all right, well, like, can it be tenant? Can I rent it out when I buy it? Majority of the time, the answer is yes. And then I can slowly add these value things over time. It's not something I've got to, pour 20 grand into it from day one. It's like, over the next 5 years, I might do little bits and pieces here in between tenants potentially. So just little bite-sized pieces, I think, is definitely achievable.
Yeah, and I think also what I do often see on the market as well with the properties that have that cosmetic uplift, new paint, fresh carpet, you see when they've been purchased, and it's only like about 8 months prior. So they've been flipped. The person's
These
taking...
are the Reno flippers, and shout out to them because they're
making some coin.
They're making coin. They're doing it the smart way, and then some investors are seeing that. The sucker investors are seeing that going, oh, that looks great, and let me go and buy it. Let me pay 200 grand more than what that guy paid for it, and because I want the shiny new property, and It's a hard mindset thing to get over, but it's so important if you want to make money out of property. It is absolutely critical. The other thing that I had in mind about where not to focus is when you get your property, when you get your offer accepted, you get the building and pest completed, right? Now, your building inspector is going to go through the property and look at it from a structural point of view, which is all well and good. A lot of the time, in fact, 99.9% of the time, they're going to find something. That's their job, right? And if they don't, then, they're potentially liable for things that may happen with the property. But what I'm trying to say is there is stuff that will come up as minor defects, stuff that will come up as major defects. Just because something flags on the BMP doesn't mean that it is a showstopper, deal breaker, property's crap, I need to move on. This is where, and this is maybe where you have a bit of an advantage being in the construction industry, where you can kind of look at it and go, hey, that's like a $2,000 job, if that, not even a big deal. Or you can go, hey, no, we're not doing this. This is a $40,000 roof. Let's back out of the deal.
Yeah.
But if you're doing it out there yourself, just knowing that, hey, just because something flags doesn't mean it's a showstopper.
Definitely.
Try and leverage it and negotiate it to your advantage, and you can get a better fucking price for the thing.
Yeah.
Most of the time.
Yeah, exactly. I think that's the baseline of that. To your point, like not everything is a showstopper. Just really understand, get quotes, and also don't be arrogant or rude to the seller and just say, "Oh, that's $50K."
Yeah.
For a bit of pillars or concrete cancer to like the house.
Yeah.
It's basically understanding, it is going to be important to get a quote and an estimate done so that you're being realistic with the negotiation if need be. Because the thing is, you want to be fair, you want to get things moving in the right direction if those things do come up. And don't jeopardize deals if you don't need to, because you're wasting everyone's time.
Yeah, exactly.
But I think also, just before we finalize that one, the other thing that you often say that always sticks in the back of my head when we're looking at properties is the actual land being where the value is and not the house. I think, to your point, the more that I see investors and working with investors, it's so easy to go with the shiny pretty one on a 400 square block as opposed to something that's a little bit of an ugly duck, needs some paint, needs some carpet on 800 block. And then I think that's also where you're going to see the difference in value over 5 years between those two types of properties.
100%. I always say it, the value's in the land and not the building. The building depreciates, the building loses its value. The land is not any more of it, right? So, value's in the land. I think we got through a little, that was a chunky episode.
Valuable,
Yeah, I'm pretty sure it was. If you got some value out of that, hit the subscribe button. It lets us know that you enjoy this type of content, and there'll be much, much more of it coming out. But thanks for sitting with us today and going through what people should be focused on as and when they're buying investment properties. If you need help on your property investing journey, Akira is the #1 female buyer's agent in the country, and you are an absolute weapon at finding deals very, very quickly too.
The deal hunter.
The deal hunter is here. If you need help, give us a buzz, 0452 046 274, or just hit us up on whatever social platform, send us a DM, and we can get things going. But that's all we have time for this episode. Thanks so much for watching. Until next time, catch you soon.
Thank you.